What is going on, everyone? Welcome back to another video, another day, another dollar, and we're going to be breaking down the ES futures contract. We're going to be going over our 30-minute time frame and then briefly look at our daily chart and kind of review where we're at on our daily chart, as I'm not sure whether to call this market down or balance, and we'll look at that in the bigger picture. So quickly, we'll go over our 30-minute chart and a few trades that took and the reasons why I took the trades that took. Today was a much better trading day for me than yesterday. I just got to trust my instincts and start doing what I think is correct. And sometimes that means going against the trend, which is kind of what I did today. Basically faded every low, and I'll explain here in just a second as to why. So let's go over what happened today. So we opened up inside of the previous day's range and inside of the single prints from yesterday, right? We had this set of single prints right here where I'm highlighting, and we opened up right inside that, right? That's a set of single prints. We opened up inside that. That is not what buyers wanted to see, okay? Buyers did not want to see us open up inside of that range, and definitely didn't want to open up and get acceptance into the lower distribution, which I'm about to highlight here. Let me go ahead and highlight that lower distribution for you, right? This was the lower distribution. In distributions, they just act as two separate days, right? So this was the lower that I just highlighted. This range from A's, the first 30-minute time frame, 43.7850 to the low of 43.6575 was the lower distribution range. Now, the upper distribution was this that I'm highlighting here, right? Much larger range, right? Ranging from 83.50 all the way up to the day's high of 23.50 or 23.25, okay? And then in between was that single print area, or basically a intraday gap, right? It looks, you see how it kind of looks like a gap between the two distributions? That's why you treat it as two separate days. Now, you can see we opened up inside of that single print area. We pushed up into the upper distribution in A period. After filling the single prints, we pushed up in B period. Could not find acceptance. 2 times we could not find acceptance in this range. Now, one thing I want to point out, and something that I've been kind of looking at more recently, is not only looking for market generated information such as single prints and Y points of control, but looking at areas that we have high volume nodes. And this area that I'm highlighting right here was basically where point of control was from yesterday, and a high volume area, a high volume node. And we pushed right up into that range between 43.90 and 43.97. So that area was going to be a no-go long zone for me, right? I didn't want to long into this range. If we got above it, then yes, I would have been perfectly okay with that, but we didn't even get above it, so I was not comfortable taking longs there. That was a great opportunity to take a short, in my opinion, especially seeing how we didn't find much acceptance in there. We got a reversal bar in B period nonetheless, and then we began to want one time frame down in C period. Now, all one time framing down means is we were taking out previous time frames lows and setting lower highs and lower lows, right? So we did that pretty much for the majority of the morning, where we kind of just drifted lower, took out the previous day's low here, right? We took out the previous day's low at 65.75, and then your next destination was going to be that Y point of control at 59.25. If I pull up my destinations, you can see that 10Y point of control was the next downside destination after filling those sets of single prints. So I'm going to take out part of that range right there, that low of 83.50. You'll see why I'm keeping this A's high 78.50 kind of highlighted here. But after we got back into the lower distribution, we began to one time frame down, and the next downside targets were the day's low, right, at 65.75, and then your next target on the downside was the 10Y point of control from the 13th at 59.25. Now, we got that later in the morning. What was it? A, B, C, D, E, F. We got that in F period. Got right down to it. And in F period, I was looking to get long, actually. This is where I started trading. I didn't take a trade until F period after we pushed down into that 10Y point of control. Now, the reason initially I was getting long in that 10Y, near that 10Y point of control, was because I was looking at this high volume area here where we had that 10Y point of control, right? I was looking from the range from 43.59 basically down to 43.51. Okay, that's what I was looking for to take a long, right? I didn't want to be shorting into this area, right? Because from all this volume that was built up here, it resulted in the market going higher, right? And then all the volume that was built up here kind of resulted in the market going down lower. So that's the reason why I didn't get long up here. That's the reason why I didn't get short down here initially. All right. So we pulled down into that area a few times, and I took responsive longs and got out for a quick couple points, right? Another reason for it, for the long action, was because we had a wide point of control right where I'm highlighting here, right? We had a point of control that was being developed above at the 72.50 level. So that's what I was looking to rotate back into each time I got long here, right? So in each new low, I was, with the idea, yes, the market is going lower, but we failed to go trend several times by holding single prints, right? We had an opportunity in C period. They got filled. We had another small opportunity in F period. They got filled rather quickly. So each new low, I was looking to fade. And basically, as long as we didn't get below 43.51, that's where I would have stopped my long positions. So each time we pushed down into that area, I got long, and basically came out today with 65 points on the day, which is great recovery from yesterday. So 65 points is what I came out with today. Really good trading on my part, especially in this long here in H period. All right, I got long here after we set the new low and came back into the previous range. After we started to get above 53.55, I got long to essentially get back to this point of control up here at 73.50 that was being developed, right? So I wanted to get back up there to create a wider point of control, and that's where I made the bulk of my my points, was on the long to get back to that area. So that was more or less why I was getting long there. After that, I didn't take any more trades because I didn't know what the market wanted to do. It was chopping around a little bit, but we ended up pushing lower. After all, we ended up pushing lower after we got that push up in H period, right? One thing I want to note is how when we pushed up in H period, we could not get back above the upper portion of the lower distribution, which was that high of 78.50. We got above it by one tick. 78.75 is our afternoon rally high. Okay, we got above it by one tick. That, you see how that works, how mechanical that is, right? We couldn't do it here, right? We couldn't get it back above it in C period when we pushed up, right? That means we were finding acceptance either below or in the lower distribution. So obviously that was a great fade opportunity on the push up here, right? I got long here against all of this information here. And then that was a great short opportunity because we couldn't do it in C period. We couldn't get above 78.50. And then here we got above it by one tick. And then we came in rather aggressively back to the downside, almost setting new lows, and then eventually setting new lows later in the day. Now that's why I think keeping that there was kind of significant for me. It was something to lean against on the short to the upside. Definitely could have taken that short, but did not. But we do have that afternoon rally high at 78.75. We do continue to push lower, and this is why I'm debating on whether or not I call the daily down. We have a very small set of single prints, one tick, believe it or not, right here at, what was that, I, K. So at K's low, 48.25 is where the single prints fill, and they start at 48, which is M's high, right? And then we have a price probe, right? This is where the market spiked lower after we took out L's low at 43, right? We took that low out. The next target on the downside was 40.75, and then below that was that afternoon pullback low from the 9th at 43.31.75. And that's what the algorithms and short-term traders wanted initially, it seems, because after we took out L's low, that's what we did. We spiked straight lower. You see how this moved straight down? See how aggressive that is right there? Now that is some form of excess essentially, but we don't know it's a type of excess until tomorrow when we open up. If we open above the price probe and the single print fill and don't come back to this area, then that would be considered excess or a very strong buy tail. But the same thing could be said up here, right? This could be considered excess between 88 to 92, right? And that's, can be confirmed by tomorrow if we open up below the price probe and continue to push lower. But you see how we got to that afternoon pullback low? 30.75 or 31.75 was that afternoon pullback low. We got below it by a point and then came back in pretty good. I think after seeing this price probe, I'm going to give the sellers their due. I think I'm going to call the daily down. All right. Believe it or not, I think I'm going to say that the daily's down. We go out today with a high day, an afternoon rally high, one tick of single prints, a price probe, and setting a new low for the week. And I think this might be an opportunity for an outside week down, if I'm not mistaken. I'll have to take a look at the weekly real quick. So we'll look at the weekly and the daily. But there's your destinations. High of day 49 or 43.92.50. You get, if any, let me start over here. I'm getting excited. Opportunities are starting to rise. So if tomorrow, right, sellers want to open below the price probe of 43.43. If we open below 43.43 or even 48.25, we open below this area, 48 essentially. Sellers should take out the low of day at 43.75 and then target the low day and where the single prints start back from the 9th at 43.16. And then you have where the single prints fill at 43.08, which is this big trend day here. And then we have another set of single prints at 43.04.50 that start. And then those fill at 42.89.50. Okay. And then at that point, we're looking at getting below the 200-day moving average. And I'll show you that on the daily here in just a second. Now, if we open above 48 or basically 43.50, right? If we open above 43.50, then you're looking to rotate this market back up to, you'll have an initial pit stop at 64.75, and then your ultimate target will be the afternoon rally high at 43.78.75, and then the high day at 43.92.50. All right, and if we happen to get that, your next upside destination would be 44.23.25, the high day from yesterday and where the gap starts. Now, I don't think we're going to get that right away. Maybe we chop around tomorrow, especially since we have Jerome Powell speaking. Today we had Beige Book and a couple other things that came out. And then we had Tesla and Netflix earnings today, I do believe. So that might play a part in whether or not we chop around tomorrow, or if we begin to continue to push lower. But technically, the market should push lower, considering that I'm calling the daily down and we are one time framing down on that time frame. So let's look at the larger time frames. We'll look at the weekly just because I want to kind of have a bigger picture in mind. You can never go wrong with looking at the weekly. And like I said, for me, it kind of helps gather that bigger picture. So let's look at the weekly here. Weekly balance, right? So something I pointed out in yesterday's video is how we got into that previous balance to the tick, right? We hit that previous balance low to the tick, 44.23.25, right? Our balance high for now was 44.19. We just stretched that, okay? Now, if we do get some push to the downside and acceptance of lower prices, we should target last week's low of 43.16, okay? If we target last week's low and get below that, then we have another outside week opportunity down, all right? And then you begin to target our balance low of 42.51.25. That is our weekly balance low, okay? So the market on the weekly time frame is in balance, and we are targeting that weekly balance low of 42.51.25 if we take out 43.16, okay? Keep that in mind. I know that's a lot to keep up with. Now let's look at the daily. This is where I get excited. So this is the weekly balance that we were just looking at, right? Look at how, okay, the 50-day moving average is right around that 44.23 level, okay? So if we push up any, we will be battling not only that previous balance high, we will also be battling the gap, and we'll be battling the 50-day moving average. That's a lot of overhead resistance that we see right now. And currently we are sitting on top of the 20-day moving average, which is at 43.50. So basically, scenario that I was describing earlier just a few moments ago was if we open above 43.50, you should rotate back up, right? If we open below 43.50, essentially, you will go down and test the previous lows, basically being last week's low, 43.16. Okay, and then you'll have the 200-day moving average below you at 42.61, which is just above our weekly balance low. All right, so keep that in mind going forward. Right, you got the weekly balance low, and we are now one time framing down on the daily. Right, we are pushing down pretty good. We had just barely stretched it there, but since we got a pretty good and aggressive spike down on heavy volume, I think I'm going to call the daily down, and we should target that 43.16. If not, then we'll have a whole lot of chop, and we'll need our hard hats on for tomorrow. So thanks for watching, guys. We'll catch you guys in the next one. See you.